Welcome to the DIY Investing YouTube channel. We are working through every company in the S&P 500, and today is Altria Group, ticker MO. Over the next 5 minutes, I will give you my valuation and discussions on quality of this company. So let's dive right on in, and the first thing we want to look at is industry. Altria is in the tobacco industry, and I have heard of this company before, so I already have some good idea of what they do, but they sell cigarettes. They sell cigarettes, tobacco products, and wine, primarily in the United States, actually solely in the United States, because their foreign subsidiary has been sold, and that's Philip Morris International. So they are a U.S.-focused cigarette manufacturer, and their primary brand is the Marlboro brand. They also have Black & Mild, Copenhagen, Skoal, Red Seal, and Husky. So those are mainstream brands, and the Marlboro brand is the best-selling cigarette in the United States. The beta is at 0.70, and that is significant because within the S&P 500, typically around 1, and having a low beta is a good sign of a positive, high-quality company. Now, what I like to do in every single one is look at return on invested capital, and immediately we're going to see something very positive. They have lost money in only 1 year in the last 20 years, and that was 2019. It would not surprise me at all if there's something funky going on with those numbers, because this historically has been an amazing company. If we look at 2002, I'm just going to read through these return on invested capital numbers because they're so impressive. 22%, 16, 15, 12%, 16, 27, 29, 24, 23, 2020, 2020, 30, 67%, 30, 19, 13, and 8%. So the last 3 or 4 years have been a bit of a struggle, but I believe that 2019 in particular is probably due to a write-down of one of their investments, and so these write-downs could temporarily lower what it looks like in their earnings, while their earnings are actually much higher. But we can dive into that a little bit more. Now, everything's impressive here. This looks like a very high-quality company. What we're going to see immediately, though, is look at these 10-year median returns. Return on equity, 123%. Return on invested capital, 24%. These numbers don't necessarily match over here. Now, these return on equity numbers are astounding. Basically, what you can take away is selling cigarettes is incredibly profitable, incredibly good business from the standpoint of shareholders, despite its negative societal effects. What we're going to see from the valuation is you have a negative price to book and a positive price to earnings. This doesn't mean that you're losing money. What it means is that you have a negative book value. And this happens because you've had long buybacks over many years. And so your book value, when you buy shares above book value, it lowers your book value. And if you do it long enough, it turns your book value negative. And that's what we'll see, I'm sure, if we dive on a little further. One thing you'll see is pretty strong gross margins, going 54%, 59, 56, 58, 59, 61, 62, 64, 62, 66. Gross margins have actually been growing over time, and that's pretty common because a lot of the business strategy here is to raise prices over time. And so your revenue has grown at 2%, and this is despite falling volume sales. And so there's constant raises in prices. Your assets haven't been growing at all, despite your free cash flow growing. And this is, again, all really impressive when you think about what it means for a shareholder. So first thing we want to touch on is, first thing we want to touch on is shares outstanding. And you're going to see is they're buying back shares every year because they've gone from 2 billion shares outstanding down to 1.8 billion shares outstanding, and this number is decreasing each and every year as they continuously buy back shares. That is their strategy, and it's one of the things that's allowed them to continue to grow over time. Let's look at the balance sheet, and you'll see what I mean about negative book value. Shareholders' equity is negative, and so that means that they've continued to drop this book value over time. And so you're going to actually have more liabilities than you have assets. And when this occurs, it gives you that negative shareholders' equity number, which most of the time means that a company is on the brink of bankruptcy or insolvent. But with a company like this, it's not. This just means that they're using debt. And here you started the decade with $13 billion of debt, and you moved up to $27 billion in debt. And if we compare that to the market cap, again, that's only a fraction of the market cap. So you have a lot of debt here, but it's not a lot compared to the market cap. So the company's actually, that's only like a quarter of the market value of the company is in debt, and yet you have negative shareholder equity. Why is that? It's because the cash flows are so reliable, they can afford to have a very high debt load, and it allows them to buy back these shares over time. And so what you're actually going to see is retained earnings are growing over time because they're retaining earnings. But the treasury stock continues to get more and more negative because they've bought back so many shares. They've spent so much money buying back shares. And when we go to the cash flow statement, you're going to see that. So cash flow from operations is positive every year. And that's able to exceed, do we have cash paid for, there's no cash paid for interest on here. But it would show you what they're doing is basically this cash flow from operations is easily covering all those interest payments. And so then they're able to have constant buybacks each and every year. In addition, they have a constantly growing dividend. So they're buying back shares, they're constantly paying a dividend, and that's the story of this company. It's not a lot of growth, and certainly, but the dividends are very reliable, and the share buybacks are really reliable. So Altria is one of the historically best investments of the 1900s in the United States. This company has been amazing as far as an investment of shareholders, and you continue to see why, because these high return on invested capital numbers. I believe if we were to do more investigation that these last few years are due to some temporary write-downs and some temporary problems. They could be a sign of worsening in the business, but I think what you'll see is this long-term track record really shows the strength of this business. Altria is a high-quality company, but it has a big durability problem. If there's ever a cure to nicotine, and there's some way that the addictive product can be totally retired or totally replaced in some way by something that's less harmful to people, and that's not done by Altria themselves, you could see a massive problem for their business. But as long as they continue to sell an addictive product that people want and are willing to pay for at increasingly higher prices, it's going to be a good business from a shareholder's perspective. So, the valuation ratio is high. I wouldn't pay a valuation this high. However, the problem is you really need to normalize it against the earnings that are more reliable. And I think the way you would do that is to compare to something like the dividends per share. So let's see, $3.52 to $50. So you have a very high dividend yield. They wouldn't be paying a dividend of $3.52 if they truly thought the earnings per share of $1.34 was real. And so basically you need to triple or quadruple that earnings per share, and that collapses your PE from 37 to like 12 or 13 or less than 10. And so then you have a much more attractive business. And so I think most likely this company is relatively attractively priced, but it might be slightly overvalued depending upon what you think their growth prospects are going forward. Altria is a high quality business. It's already been on my watch list in the past. I don't think I'd ever own it in the future just because I have durability concerns. But if you don't have durability concerns, Altria could be very attractive. So like this video, hit that subscribe button and ring the bell in order to get notifications as I upload future videos. Thank you for listening, and until next time, stop paying fees, start building wealth.